Hey, Aaron Adams here with Infinity Investing. I wanted to just take a few minutes today and answer a question that I get all the time relating to rental properties. People always ask me, when should I start buying rentals? I've read books. I'm interested in passive investing. The idea of having mailbox money is appealing to me, but what should I do for that first one? So I wanted to just take 10 minutes today and give you a sample of the type of content, the type of information that we teach at Infinity Investing, and help you start thinking about passive investing the right way. One of the mistakes that I made early on was I got it in my head that I needed passive income. And look, I love passive income. My passive income now is over $100,000 a month. And 22 years after I started this real estate journey while teaching high school. And so I read some books and I attended a couple of seminars and said, okay, passive income is better than active income. And by passive, I mean somebody else goes to their job and works to pay you. Active income is your work and your time. And as a high school teacher, I didn't have a ton of time for active income. I was like working on the nights and weekends to make additional money, investing in real estate. And so the idea of, maybe owning an apartment building that after I paid the mortgage and paid the bills gave me $5,000 a month was really, exciting. It was really interesting. And so in the first 2 years, I was doing flips. So I was making active money. And then I started to accumulate some passive investments. I got up to about 7 properties. Now, they were all heavily mortgaged, 80, 90, 100% financing. And I started really kind of wondering, what the path should be for that, because that's the question is, not only is it how much should I spend on my first rental property, but when should I buy my first rental property? Should I get a mortgage on it? So I want to address kind of that specific topic for you. Maybe you have started your investing journey. Maybe you signed up for our basic membership with Infinity, or you've scheduled to attend one of our events. If you haven't done that, we have a link below that you can join us absolutely free at one of our full one-day trainings. But I got to the point where I felt like even though I owned some passive investments, because I had such big mortgages on them, I didn't really feel like I owned them. I felt like the bank owned them. They were getting all the rents. I was getting all the headaches and the work. And so I said, I need something that's more rational, that makes more sense. So I have 4 kind of bullet points that I want to briefly cover for you today, because this is an important topic. I mean, how do you go from teaching high school with 0 passive investments to 22 years later having $100,000 a month come in? I mean, I could stop working today and those rents would continue to come in, and I could, hire a manager and go live in Thailand if I wanted to. And so how do you build a financial portfolio that gives you the passive income? And what are the steps? Because, on one hand, if you do like I did and borrow too much, then you run the risk that if something catastrophic comes along, you could lose all of the properties. On the other hand, if you wait too long, then it's really hard to catch up. I mean, all of my best deals right now, I bought after the last crash, 2009, 10, 11, 12, 13, when they were giving the properties away. And those properties have had a chance to go up 300 to 400% in that same time period. So the first question I want you to think about is passive versus active. And let me get my stylus out here so I can kind of highlight some of these things. Okay, passive versus active. And what you as an investor need to think is, number one, do you have any experience? If you don't have any experience, then I don't want you to run out and buy a rental right away, unless there's a couple of unlesses there. You need to figure out what your financial goals are. You need to figure out how much time you have to do real estate on the side. So in my case, I was a full-time high school teacher. And I did my first flip in 2000 and just worked on it nights and weekends. 6 months after I bought it, I sold it and made $50,000. Now imagine what $50,000 could do for your financial future, what it would mean to your budget to have a check like that in a couple of months. And so for me, I needed to spend every second of available time that I had on active, because that's where all the money came from. And if I was talking to myself for 2000, I would have said, look, Aaron, learn to make $100,000 active. So learn to do flips, learn to manage construction, learn to find deals. Okay, make $100,000, then make another 100,000, and take that second 100,000 and park it into a rental. That's the advice I would have given myself 22 years ago. And that's the advice that I give you. It's always easier to find passive investments than it is to find active deals. And by active, I mean deals that you do, that you find. And so your time in the initial phase should be spent learning active. Now, people say, well, how much should I spend? Well, if you're watching this, maybe you have $500,000 sitting in a retirement account and all of it's in the stock market. Well, then I would say to you, the first thing that you should do in the next month is to buy a rental property, because your diversification isn't good. We usually advise clients a third of your net worth should be in real estate, a third in the market, a third in a business, 10% cash. So 30, 30, 30, 10. And so if you have, $500,000 in a savings account because you're a good saver, I would say that then the first thing you should consider is diversifying into real estate. If you're under diversified, either in your retirement accounts, which we teach you how to buy property in your 401k, in your IRA, or if you're under diversified in your across the board in your net worth, because remember, your primary residence, your vacation homes, don't count towards that 1/3 of your net worth, 30% of your net worth in real estate. Those are liabilities because you pay for them, unless you Airbnb one of them. And so in terms of assets, a third of your assets being in real estate, if you don't have any property in your retirement account, if you don't own any rental properties, then I would say the first thing is to buy a rental property and then slowly focus on active, because clearly you either have a job or a business that you own that you've learned to make money from. But if you have no money or very little money and you have no rentals, then you need to focus on active and learning how to make money. We teach that at our Infinity trainings. In fact, at our next Infinity training, all-day Saturday training coming up, we're going to break down for you what we think the 3 hottest ways to make money in real estate right now. And I'll break those down for you as well. But in short, it's wholesaling, mobile homes, and Airbnb. And we talk about why we love those strategies. 10 years ago, I would have said foreclosure auction, letters and postcard campaigns, and tax sales. And so that has changed over the last 23 years. Now, the next area that I wanted to focus on, and I've mentioned this, what we were just talking about was diversification. Okay, and we teach the Yale model at Infinity, the 30-30-30-10 diversification. So 30% of your net worth in real estate, 30% of your net worth in a business, 30% in the market, 10% cash. And in my case, I've actually taken 2% of the cash and put it into crypto. So I love crypto for a cash diversification standpoint, not necessarily as an investment. It feels too volatile, but again, I like having money in there as part of so it's 10% of my net worth in cash, but then 2% I put into crypto. But thinking about where you are specifically, one of the benefits that we give you at Infinity is the opportunity to get one-on-one consultations. I host a monthly training in Indianapolis for our more advanced students. We hold it at my offices. It's 3 days, Friday, Saturday, Sunday. And part of that training is you get to sit down with us one-on-one. We break down LLCs, S Corps, tax benefits, reducing your tax bill. You have a consultation for that. You have a consultation for property investing. And so my team of property advisors will sit down with you. What do you have? What are your goals? Where's your money? What pots of money do you have? And how do we help you get to the diversification that's getting you to the goals that you want? The third one-on-one that we give you at Infinity is a real estate game plan. So imagine sitting down with me and you and I discuss where you live. And so, let's say you live in the Bay Area and I'm like, I hate Airbnb. Mobile is kind of far away. Wholesaling is a great strategy. And we talk about that. And you say, well, what about apartments? And we talk about that. And so getting that kind of one-on-one feedback is critical. But for general purposes, if you're watching this and you don't have a third of your net worth in real estate, then the goal is to change that. So if you have the cash, if you have money in a 401k, then let's show you how to get that into real estate. If you don't have the money and your net worth is not where you need it to be, then let's get you going on an active path. Okay. Third area that I wanted to mention today is I get this question all the time. Now, my biggest operation is in Indianapolis. I started my real estate journey 22 years ago in California. I left California in 2003 when I couldn't get what I thought were good deals anymore. For those of you that are familiar with cap rate, when cap rates dropped to 5 and below out in Riverside, then I started looking for another state to invest in, and I moved to the Midwest at that point. I had an investor from Chicago say to me one time, well, I don't really want to buy a rental property in Indianapolis because it's so far away. And I had to laugh at that because Chicago is 200 miles from Indianapolis. And a lot of us have this emotional need that we want to be able to drive by our properties. Maybe it's like a trophy, an investment trophy. And I can't emphasize enough that that's what unsavvy investors do. That's what the rookies do. I got a call a few years ago from a Singaporean, and they said, hey, I want to buy properties from you in Kansas City. And I was like, how long does it take to get from Singapore to Kansas City? And they said 30-hour travel day. And I said, how did you even know about it? And they're just very savvy investors in Singapore and Southeast Asia. And over the past 10 years, I've had clients from Hong Kong. I have a group of investors from Tokyo, Singaporeans, UK investors who want to be in the US for specific reasons. And maybe you're watching this and imagine yourself going to Dubai to buy rental properties or investing in Malaysia. And for Americans, we tend to want properties in our own backyard. But if you're not getting good returns, which right now, really only the central US has good cash flow returns on rental properties, then you need to think about investing remotely. And that's where at Infinity, we have a lot of opportunities because we sell you properties from Charlotte, Kansas City, Indianapolis, Dallas, Idaho. We're doing deals in 5 markets. And not only will we educate you at Infinity, but we can also sell you deals directly. Now, the last thing I wanted you to really think about are the different kinds of rentals that are out there. Because depending on where you live, depending on how much money you have, depending on what your tolerance for risk are, there are a lot of different types of rental properties. So when you're answering the question, how much did you spend on your first rental? It's really, well, how much money do you have? How's your credit? Are you comfortable buying in another state? What returns do you need to make? Those all impact that. So right now, single-family home investing, it's very difficult to make a double-digit return from the rents. It's easy to make, let's say you put $100,000 into a single-family home. It's easy to make $7,000, $8,000, $9,000 a year from the rents. And right now, single-family homes have been appreciating double-digit. So the clients that I've sold homes to over the last 3 or 4 years are making 17, 18, 19% a year on their money. Now, apartments are tough, though. Apartments, it's very difficult to make more than 5% a year on your money. That would be without a mortgage, just, if you bought an apartment building cash. If you get a mortgage, you can probably make 8, 9, 10% on your money a little bit easier. And apartments have been going up really well, double digit. Short-term rentals, I love. Airbnb is one of our top 3 strategies that we teach investors. And if you're in a market that has hotels, for whatever reason, whether it's a convention center, a downtown area, buying an Airbnb, a short-term rental near that center is a strategy that we teach in detail. I have about 30 Airbnbs that I own, mostly in Indianapolis. The final area that are good for rentals that I find a lot of people don't think about are actually mobile homes. So imagine buying a mobile home park and renting out the lots, so you have no roofs, no walls, nothing. But I just bought recently a mobile home in another person's park. So I don't own the park, I own the home, and I actually rent that home out in their park. And if you have very little money and bad credit, we can show you how, for as little as $10,000, you can create a rental property in somebody else's park. That's one of the other strategies that we teach. And so this whole topic of buying rentals is one that we teach and talk a lot about here at Infinity. And as you can see, hopefully you can see from just me discussing it for a few minutes, it's a topic that is very specific to you. And so if you've signed up with Infinity, then make sure that you are attending the trainings. Get on our one-day training, get on the trainings that we have available, because there's going to be a lot of opportunity for you to ask questions and get moving forward on this. If you haven't yet signed up, then click the link below, join us at one of our one-day events, and get going on this journey. We're excited that you've taken the time to join us today, and I look forward to meeting you at one of our live events in the very near future.